Hi, Warren William here for Smartest Data. So what's the future for Bitcoin and other cryptocurrencies post-FTX? If cryptocurrencies are subject to more rules and regulations, will they have a future? Will the original dreamer idea still be around? So what could be the role of a cryptocurrency such as Bitcoin? And how does blockchain technology fit into all this? So let's go to the video. Let's take a look at trying to answer these questions and see what we can find out. So if you clicked on this video, then you're probably interested in cryptocurrencies. Now think back to 2009 when the first cryptocurrency in the form of Bitcoin came into being. Since 2009, there's been an incredible rise in the interest in cryptocurrency markets, the volume traded, and in some cases, but not all, the value of the individual coins. While it's difficult to pinpoint a singular specific reason, the most often quoted is the lack of trust in a government's traditional role as the issuer of a fiat currency. As we all know, the cryptocurrency world was stunned, rocked, shaken by the FTX scandal in November 2023. In the aftermath of the FTX scandal, the cryptocurrency and its investors are quickly learning about another important role of the federal government, which is the regulating of financial markets and securities trading. What is the cryptocurrency, or more important, what is the role, mandate, or purpose of a cryptocurrency? Typically, a cryptocurrency is described as having three possible roles. A currency, it's in the name, a store of value like gold, and a security. So let's take a look at each one by one. A cryptocurrency such as Bitcoin can be a way to trade, negotiate, exchange, or barter. The name makes it sound like a money, but it's not a money. The terms used, such as a crypto wallet, is possibly intended to make it sound like a fiat money, a medium of exchange. Then again, if two people agree that anything can be used in exchange or money, if the two parties agree that bananas or pineapples can exchange and barter, then so be it. Yes, cryptocurrencies are a form of money. They are used in exchange if the two parties do agree. So is the US government about to let another currency compete with the US dollar by being regulated in the US? I, for one, cannot imagine the conversation, and I cannot see the proposal based on the perceived dislike of the US dollar because of the controls of regulation as being the reason. That's just not going to fly. So in the future, the question will be, a cryptocurrency, will it act to buy and sell things? The answer is probably yes, but there'll be much more scrutiny. Gold is a unique position as an asset. The world's major central banks will hold gold as a reserve asset to establish the value, reliability of the fiat currency under their mandate. In the US, think of the Federal Reserve and the US dollar. The currency being backed by gold reserves, gold provides a buffer against economic and financial instability. Of course, this reinforces a perception of gold as a safe haven, a reliable source of value in times of price instability, being inflation or deflation. Periods of price instability undermine the value of fiat currencies. Gold is often considered a hedge against inflation because it has historically retained its value over time, even back to Roman times. Gold is a physical asset. More importantly, the value of a gold bar, a good London delivery gold bar, GLD, is established to meet the required specifications as set by the London Bullion Markets Association, the LBMA. The GLD bar weighs 12.5 kilograms and they are assayed to be 99.5% pure gold. The gold bars are produced by a number of qualified LBMA gold refineries. The gold bars are registered and stamped. Therefore, the GLD bars are traded on the London bullion market in international trade and investment as they are recognised as being established quality and purity. Any other gold bar must be assayed. Therefore, the question is, can a cryptocurrency establish the same authority as gold? It is true that a cryptocurrency such as Bitcoin has one similar characteristic to gold. It is not tied to any currency or government. So are the value of cryptocurrencies subject to the same inflationary pressures as fiat currencies? Investors view gold as a safe haven that can protect their wealth during times of price instability. Can a coin such as Bitcoin be viewed in the same way? Well, look, over the past 2 years, there's been two very distinct periods of inflation. In 2021, a period of low inflation, and 2022, a period of high inflation. Let's take a look at a quick regression analysis between the price of exchange traded fund for gold and gold using data from bar chart. A regression analysis of the daily closing prices of Bitcoin and their SPY gold ETF for the past 2 years gave an R-squared value of 0.3. The correlation is very low. It was said that a cryptocurrency would behave like gold, which is a store of value, but during times of high inflation, when this was the first true test in 2022, Bitcoin failed miserably. So how will cryptocurrencies be regulated? It will be regulated as a security because it clearly fits the Howard case from 1946, determining an investment contract. Invest money, common enterprise, and an investor expects profit. The SEC is going to be the lead regulator in the US, in charge of making sure that cryptocurrency markets follow all the financial rules that the SEC is in charge of. Look, over 95% of the cryptocurrency trading happens on 5 platforms. They should have to register with the SEC if not already done so. The SEC is in the process of employing more officers and forming the Crypto Assets and Cyber Unit. Look, to be clear, the SEC is fine with the crypto business that follows the securities laws. The SEC's push for enforcement will have a big effect on how the cryptocurrency markets work because tokens are investments. They are sold as investments. They will be governed by securities laws. The SEC's actions have been against initial coin offerings for ICOs and the new types of blockchain tokens that have appeared, such as decentralized finance and non-fungible tokens. Many of the new projects seem to get around securities laws because the tokens represent collectibles like in-game items or digital artworks. No matter what the token stands for or represents, securities laws will apply to these tokens because these tokens are being bought as an investment. Even though these tokens believe that they're being sold as collectibles, look, the regulators will treat them as securities. Crypto platforms in the end should work the same way as regulated platforms always work, so investors should feel the same sense of security. If a crypto platform migrates to being a crypto exchange and signs up with the SEC, the crypto exchange, different from a platform, will have to use technology to make sure that its order books could be checked for the market not to be manipulated and follow very strict rules on how orders are filled. Shared ledger technology has been studied for a long time, going back decades. The introduction of Bitcoin blockchain was the first distributed ledger technology that was completely decentralized, resistant to censorship, any seizure, and collusion. Blockchain technology in its various manifestations, such as the Bitcoin blockchain and others, is ultimately a global consensus system. This system removes the need for a central administrator to be managing the source of information. Thus, the information becomes, neutral and offers participants to coordinate and cooperate. The real essence is that for the first time, participants can do this without having to trust and verify each other. The vision is that the range of applications for blockchain extend way beyond cryptocurrencies and finance into an infinite range of fields, possibly real estate, commodity trading, for example, energy, and to supply chain management. Blockchain, under numerous applications, has a future. So the future, cryptocurrencies will be regulated as a security, but it's not a traditional security because it's not an equity or bond, so there's no assets except for stable coins. This gives an indication as to the future direction. Crypto is thought of in some circles as a global asset, maybe not so fast. The train analogy earlier is apt. The train tracks the train. Now, what's in the train? What does a crypto token represent? New regulation, let's see. Most commentators believe that FTX could have been avoided had the rules and regulations been applied. Clearly, under increased security and governance, the original crypto dream will be vastly different. The SEC has made it clear that it's willing to work with people in the industry who are willing to work with the SEC. The goal is to give crypto investors the same protection that has helped make the US security markets, the equity markets and the fixed income markets so successful. The message is starting to get through as more cryptocurrency companies are cooperating with the regulators. The various tokens, cryptocurrencies and blockchain all must carve out their value added. If they do, they will have a future. The reality is there's only two options: either embrace or be out of the crypto universe. Okay, so if you like these videos, please by all means hit the subscribe button and the bell and like the video. Also, there are the quick definitions videos out there, and recently I've started a blog, www.smartest-data.blog, where I'll be updating a lot of articles about personal finance, the stock markets, investments, and other issues. See you in the next video. Thanks.